Good afternoon. This is Jerry Gulke with the weekly look back and look ahead a little bit, I guess, in these markets. This last week we had the government report, which most people thought would not be a significant deal, and most analysts, they were thinking of the average would be, the average analyst guess was that we would drop the crop and actually lower the carryover, and of course what we found from the government was that just the opposite happened in corn especially, and that took the carryout went higher. So if you think about what the people were looking for versus what they got the opposite reaction, and so naturally there would be a negative response, and we got that in the corn. Soybeans, they lowered the carryover for this year like we thought, and we within a few minutes after the open, after the report came out this week, on Wednesday the market shot back up again 20-some cents, and then of course on Thursday we got hit with a blow again finally with a fundamental reason that you could hang your hat on that showed big cancellations of soybeans. I think the biggest cancellations in years, and of course we knew it was coming. It's just a matter of when and timing with everything, and we got it, and now we're seeing the exports drop off, even rumors and actuality of some soybeans being either rolled to next November or being outright canceled for replacement out of Brazil, which is again the government in the report raised the crop maybe to the high end on corn and beans both out of Brazil and Argentina, and then today some other private firms came out and raised it even higher than the wildest guess that some of our very analysts had in the United States. So what we had was not a good week, and of course if you look at it on a weekly basis, November soybeans closed below the last time we closed this low was 3 weeks ago. And those of you who have heard me talk on the radio or read it, one of the criteria that we have in being concerned is that if we close below the previous week's low, any week that we have a government report, that pretty much tells us that the majority of people that are voting and trading during the day suggest that corn or wheat or beans or whatever it happened to be, if it closes below the previous week's low, it is not worth as much as they previously thought the week before. Well, in fact, November soybeans closed in new lows for the last 3 weeks. Corn broke out of what would be called a bear flag, and those of you that got the charts last week may have been able to see that. We sent them out for those who wanted to look at them, and we'll do that again this week in an update just to show what's happening. Last week prior to the report, it looked pretty bullish, and again, like going into January's report, the market was leaning the wrong way, expecting a bullish market and market statistics, and it didn't happen. Now we're breaking down to the downside. If you look at December corn, it points to an objective of probably 320 and or less by fall. And again, you got to go through the whole summer and the planting season. Wheat closed at new weekly lows. Hadn't seen that since last October, and even July beans, which is the lead contract, which kind of competes with the new crop coming out of South America, it too is kind of backing off to where it was back in last fall. So if you use that as a criteria, then that also suggests that these markets all want to go back to where we were last summer and fall when we thought we were having a big crop, had a problem with maturity, had a problem with frost, and all this is kind of unraveling into pointing to a lower market. During this week, I had a conference in Marshall, Minnesota, and Brad Anderson and I sat down after the report came out and looked at the unharvested grain left, and of course this mainly in South Dakota, North Dakota. And if you look at it, it turns out to be about 200 million bushels. It didn't really take the market long to see that 200 million bushels. What do you think we're going to lose? You ask ourselves, and that would be maybe 10%. Fine, that's 20 million bushels, maybe 15. That's 30. Guys I talked to aren't losing that much to deer, and this corn is standing very well. Probably no difference in quality and test weights in this appreciably, but so you look ahead and say it doesn't matter. Whenever you get that corn combine in North Dakota, Jerry, whatever you get is going to be too much. And so the only thing left in this whole bag of tricks that we have left will be the March 31st planting intentions report and stocks report, in which we're going to hear about how much we actually use. Are we using more because of test weight and bad utilization and inefficiency of corn? We're hearing a lot of that. There's already a two-tiered market in this market where if you got good corn, you're getting a premium or not much dockage. If I've got bad corn, I'm getting docked all the way from 75 cents to $1 perhaps, depending. And we're starting to see, of course, wheat slowly take its position as being a feed grain. The government raised their carryover to over 1 billion bushels this year, which was kind of a shock to most. And wheat today on Friday closed higher, but that's kind of a reverse spreading. It's down there so low that probably 20 or 30 or 40 cents or more is probably it. It needs to be competitive with corn, I think, to get rid of it. So all in all, you've got not a lot of good news out there. So maybe finally we're getting the market to lean all towards the negative side, and we've got a few weeks left before we get that March crop report and March 31st, the stocks and acres. The acres, that could be the report that finally turns this thing around. Depending on the weather in the meantime, it's drying out next week. Guys from Iowa called today and said that, spring is here. It's not April 15th, it's March 15th. We'll be all right unless it begins to rain again. So now I think we have a time to next week and the week after to focus on the stocks report and all that. And I think we might get the traders a little bearish because they've been wrong so much. And you get a lot of newsletters coming out on Monday morning telling you, boy, if you haven't sold anything, you better sell it now. I would be saying the same thing. But if you listened last week, one of our concerns was closing below the previous week's low, and we did that pretty early, and we got sell signals. We are, for my clients, we're 100% sold for 2009 and 2010, and near 100%. This week we bought some put spreads for beans on our last 20%, which would be that 20% not covered with insurance. It looks to me like beans could very well pay off in the GRIP or the RA because you could see a price next October below $8. Some are thinking even the low 7s. So do the math. 10% less than $9 gives you about anything below $8.20 is going to $8.10 is going to pay off. That might pay. I don't know if you get corn low enough to work, but depending on the acres. And I think if there's a reason to be concerned, it will come just prior to that crop report. And I will certainly want to list some of my positions going into that. Already bought put. And if you got crop insurance, of course, by the end of that time, you'll look. You know about where you're at with 80%, 85%, or whatever your APH is. So there's no reason that if you miss the market to get totally crazy on trying to chase it. But I would certainly sell any good rallies in the meantime and watch the weather. And of course, utilize that insurance for what it's worth. And that means to look at it. They've begun to sell 2011 soybeans. I'm not that concerned about 2010 until I see the acres in next June when we finally get planted. But we've got a big crop coming worldwide in beans. China's trying to thwart their economy, so I think beans over $9 on the border trade. It's time to lock in some of that, and so we locked in our first 20% at those levels, and we'll lock in more if on a rally, and try to get coverage for those areas. So we've got a lot of things ahead of us coming, but I think that if you look at the world economy, the U.S. economy, and what's going on, I think what you'll see is probably the title to my next or my next column in Top Producer, and that's we're in an oasis in a sea of despair, or in a desert of despair. In other words, agriculture has got profit opportunities out there that we shouldn't just cast aside because we think we might get a dime or 50 cents higher. And we're one of the fortunate ones in this whole world economy. I don't know whether that'll last if the employment goes up, but in higher unemployment, then they're going to start to affect us again. So we should consider how lucky we are and what's considered the situation we're in, and take advantage of some of it, especially out into this next year that we're in now, 2010, and maybe even beyond that a little bit. So with that, we'll close, and we'll see how things are next week. If you want, we're going to try to do some charts again, and we'll put on the website for you to locate, and so like we did last week. And if you want one sent directly to you, we can do that. You can get a hold of my daughter, Ashley, at ashley@gulkegroup.com. Have email, give her a call at 815-520-4227, and she'll be glad to mail you a copy. And with that, have a good weekend, and